In this video, I'm going to go over the new data released by Domain about how much property prices have risen or fallen in the June quarter. If you own or are looking to purchase your next property, you need to understand what is happening in the market right now. Let's get into the video. If this video brings you value, please like for the whole YouTube algorithm and comment your thoughts below. What do you think will happen to property prices over the next year or two? And subscribe, because according to my analytics, 75% of you watching this video have not subscribed. So you better subscribe now for property market updates, personal finance, savings and investing. Let's get into it. So Domain have just released their new data for the June quarter and I'm shocked in what I've found. Let's look at the data. Okay, Australian property prices. It's not good. Nationally, house prices have fallen 2% from the March to June quarter. We're going to break it down city by city and we're going to break it down house versus apartments. Let's get into it. So firstly, Sydney has had a price decline of 2% in the quarter. So that's a pretty decent fall, and with the second lockdown coming, and if they do go into a second lockdown, that's going to have a greater effect on the decline in Sydney. Brisbane has only recorded a 1.4% decline, but it's still a pretty decent decline. And they've obviously done a lot better than Melbourne and Sydney handling the health crisis that's going on at the moment. Adelaide, the quiet achiever, has recorded a 2% gain. So Adelaide always seems like it doesn't move much, but I wonder if when we get later into this downturn, if it's going to affect Adelaide as well, where the prices start to decline more broadly. Perth has had a decline of 1.5% over the quarter, and it's had a decline of over 20% since its peak. So it just goes to show property prices can decline significantly. Canberra has actually gone up a whopping 4.1%. That's right, 4.1%. I wonder why that is. Maybe it's because they're all politicians that live there and they can give themselves a great pay rise even if there is a recession. Hobart still going strong with a gain of 1.4%, but I think things are going to start slowing in Hobart because they have the highest mortgage stress and the highest rental stress. Also, Hobart has a big reliance on tourism and that has just been destroyed. Darwin, continuous decline, down 1% over the quarter. Melbourne has a decline of a whopping 3.5%. That's right, 3.5% from the March to June quarter. And this has only just begun. Now, year on year, it's still looking pretty good for now, with Sydney up 10.5% year on year, Melbourne up 6.9%, Brisbane up 2.4%, and Adelaide up 3%. Canberra is up 9.3%, Perth 1.4% up year on year, with Darwin down 0.1%, Hobart still up a massive 10%, but I expect that to start to slow down, and nationally, house prices are still up 6.6% year on year. Now let's get into the apartment and unit market. Over the March to June quarter, nationally, unit and apartment prices dropped 2.2%, down 1.7% in Melbourne, down 4.1% in Brisbane over the March quarter, Adelaide down 2.9%, Canberra, units and apartments aren't doing good there, down 1.3% over the quarter. Perth with the biggest declines, down 4.9% in the quarter. That is a huge decline. Hobart is down 1.5%, with Darwin down 3.7%. And again, that's down 2.2% for units and apartments nationally. Okay, so what does all this data mean? Should I purchase now or should I wait? Let's get into it. Now, my thoughts are the declines have only just started and we're in for some bad times coming up. And I'm going to tell you why. Now, this scenario is based on that there's no more market interventions. For example, the RBA could cut interest rates to negative. The government could give more cash grants for existing home buyers and investors. The government could, scrap stamp duty for overseas investors and just let them buy up all the empty, crappy apartments in the CBDs. Now, this is based on that unemployment is set to hit 10%. Josh Frydenberg himself said the official unemployment rate is going to hit 10% approximately at the end of the year. And Roy Morgan has underemployment at 24.5%. That's right, nearly a quarter of the workforce is unemployed. And no matter what they throw at the market, if you're unemployed, you can't get a loan and you can't get a house. Also, they're saying up to 2 million people could be taken off JobKeeper with the new testing criteria, where businesses have to prove that they've had a reduction in turnover of 30%. So for those companies, they've only had a reduction of 20 or 25%, they're still in a lot of pain. They're just going to have to lay off more staff and the unemployment rate is going to skyrocket. Rents are also being reduced. Now, people aren't talking about this, but if you're a property investor, The amount you can borrow is based on how much rent there is. If you want to buy a $500,000 house, but you're not getting enough rent to cover the mortgage and you're negatively geared, there's only so much you can negatively gear, and the bank would only lend you so much. So if rents go up, people can borrow more and bid up property prices. If rents fall down, investors don't have as much money to invest and their cash flow becomes an issue. So my thoughts are, nationally house prices could fall at least 15% very easily. And again, this is based on there's no more market interventions. And I expect prices to decline more in Melbourne and Sydney, where there's been more speculation and there's been more sharp run-ups over the past 12 months. Prices rose double digits, and that's just unsustainable every year. So I expect in Sydney, prices to decline maybe 20 to 25%, and in Melbourne, 25 to 30%. Again, if there's no more market interventions, because there's over 50% of people's wealth in Australia is tied up in property. So you bet the government is going to throw everything they can to stop it from crashing. The RBA even considered shutting down the property market if prices decline too far. What should we do? Now, I can't give you financial advice. I don't know your personal situation, and this is for entertainment purposes only. But what I would do is I would pay off high interest debt. I'd create an emergency fund because we're heading into some tough times, and I'd save a bigger deposit. There's no need to FOMO right now. You know, the media's going to put out that first home buyers are surging, but don't believe in the hype. They're going to put out articles every day contradicting themselves, but you need to go by the facts, the data. Go by that. The trend is prices are declining, and it's only just begun. Property is not a liquid asset like shares where they can sell and then prices decline really rapidly and then rise rapidly. Property takes months to sell, and then it takes months to get that data. So we're not going to start seeing big declines until after 6 months. Now, there's always going to be some outlying suburbs and some outlying properties. So what I would do for the market that you want to buy in, because again, there is many different markets. The Australian property market isn't just one market. There's each city, and then there's regional, and each suburb has its own market. So what you want to do is go on realestate.com.au, pick the suburb that you want to buy in. Now, what you're going to do is have to narrow it down to the type of property you want to buy, because units, townhouses, houses on big blocks, they all perform differently. And for example, what I've been doing is I've been monitoring 3-bedroom modern houses or townhouses in Ballarat. And what I've noticed over the past 3 months, the asking price has gone where a minimum I saw before 3 months ago was $290K for a 3-bedder. And now I'm seeing townhouses on the market for $250. Now, the data hasn't come out showing this because, again, the data takes months to come. But I've been able to see this because I've been monitoring the market. Now, I'm not saying go buy in Ballarat now because they've got one of the highest mortgage stresses in the market. But what I am saying, I'm going to keep monitoring this, and when I start to see a stabilization of property prices or the declines, slow down, because right now they are declining rapidly, but the data's not showing that, I'll go start smashing out offers 20% below the asking price, because you want to take advantage of the fear in the market. Because once we get the data that property prices are rising, that's going to be 3 to 6 months old. And then vendors won't have that fear anymore, and they're not going to let you get a property at a discount. If this video brought you value, please like for the whole YouTube algorithm. And comment your thoughts below. What do you think will happen to property prices? Or do you think that the government's just going to throw more money at it? And subscribe for more awesome content on property markets updates, personal finance, savings and investing. I'll see you in the next video.